Hi, welcome to Solution in YouTube channel. This is the second video on accounting cycle. In the previous video we discussed the journal entries in detail. If you missed that, you can see the link in description. In today's video we will discuss the ledger accounts in detail. Let's start from its format, the nature of different accounts and with balance type. First, the format. A typical ledger account is looked like this. On the top, the name of the account is stated. There are always two sides of a ledger account. A debit side and a credit side. Both sides contain a date and detail column. The amounts hitting a ledger account will be recorded on the relevant side to reach a total. Let's move on to nature of accounts. An account can either have a debit nature or a credit nature. Accounts with debit nature are assets and expenses. All liability, equity and revenue accounts are credit in nature. It is very important to learn that, without exceptions, almost in all cases, assets and expenses have debit balances. And all liabilities, equity and revenue accounts will have credit balances. Now let's see how to calculate the balances. Here is the rule. If total of debit side is greater than credit side, the differential amount will be a debit balance. And if the total of credit side is greater than debit side, the differential amount will be a credit balance. Now let's see how a journal entry is posted into a ledger account, with a simple example. Assume a businessman started a new store with $100,000 cash. Since we know, a journal entry will involve at least two accounts. In this case the accounts involved will be cash and owner's equity. This is the journal entry for the transaction. Debit to cash and credit to owner's equity with $100,000. The ledgers of both accounts are as follows. As per the format that we covered in last slide, you will see that both accounts have same elements, like date, description and debit and credit columns. The journal entry says that cash is debited with $100,000, so we'll go to cash ledger and mention the corresponding credit account that is owner's equity and write $100,000 on debit side. The journal entry also says that owner's equity is credited with $100,000, so we will go to owner's equity account and mention the corresponding debit account that is cash and we will write $100,000 on credit side. You will notice that in cash account the debit side exceeds credit side by $100,000, so cash balance will be $100,000 debit. Similarly, in the owner's equity account, the credit side exceeds the debit side by $100,000, so the balance of owner's equity will be $100,000 credit. Now let's continue the same example from our previous video in which we covered journal entries, and now we will post those entries into ledger accounts. The first transaction that has just been covered will be reflected on debit side of cash and on credit side of owner's equity account with $100,000. On 2nd April, furniture was purchased for $7,000 cash. The corresponding accounts are reflected in the debit side of furniture account and credit side of cash account with $7,000. On 8th of April, the owner purchased goods partially for cash and partially on credit. This will affect debit side of purchase account with $2,000 cash and $1,000 accounts payables. The corresponding credits will be given in the cash and accounts payable accounts. On 14th of April, the owner sold goods for $17,000 out of which $5,000 were for cash and rest on credit. This will affect debit side of accounts receivable account with $12,000 against sales that is still receivable from twin brothers and cash of $5,000 that was received up front. The corresponding credit will be given in the sale account with respective amounts. On 18th of April, Alex withdrew $2,000 from his business. This will hit credit side of cash account and debit side of drawings account. On 22nd of April, Alex paid $500 of his payables to Master Retail Store. This affected credit side of cash account and reduced the liability by hitting the debit side of accounts payable account. On 26th ND of April, Alex received $10,000 of his receivables from twin brothers. This affected debit side of cash account and reduced the current asset by hitting the credit side of accounts receivable account. On 30th of April, the salaries were disbursed worth $2,000. This affected credit side of cash and debit side of salaries as expense. Now all the posting is done. All we have to do is to balance the accounts by subtracting the lower side total from higher side total. The balances are highlighted in yellow. I hope you have learned how to post transactions from journal to ledger accounts. In next video we will cover trial balance without and with adjustments. If this video was helpful, hit the like button and don't forget to subscribe for more videos. So see you in next video. Take care.